Hey Crips, in this video we're going to answer all the ML questions you dropped in our Discord channel for you to understand our project a bit better. Let's jump into the first question. Are the DAO investments fully algo or human-based investments? If it's fully algo or human-based, what sort of investments will it be touching? What sort of asset classes will it be involved in? As you know, the DAO investments will come mainly from private pre-sales. First of all, let's clarify the concept of a private presale. A private presale is a stage of a crypto project in which private financing is firstly sought by selling its token in a lower price than the following public rounds. All investments made with the DAO funds will be previously voted by the DAO members. As you know, the blockchain world is constantly evolving and new opportunities are coming up every day. That's why we will be open to hear new ideas and suggestions. But the initial idea is human-based investments, which includes NFT projects, private pre-sales, and buy the dip in altcoins, and then investments with bots, which includes NFT bargains and trading bots. Is there like a stop loss involved for the DAO? Or all investments will be hold type, where it will be unrealized loss perpetually if it goes against the algo's direction? When it comes to trading bots, each strategy is different. Some of them will have stop loss, and the others won't have. Regarding to the buy the dip strategy, the DAO members will decide what conditions apply on each investment. Investments in private pre-sales won't have stop loss. The majority of them will be long-term investments, and the community will decide what to do in each token release. Any specific region in particular where the investments are concentrated on? The answer is no. The region or location is irrelevant. The pre-sale club just focuses on the project features and its growth potential. Is the DAO funds going to be invested as retail size or as a hedge funds? Working as a hedge fund is one of the main DAO features. We will have a large amount of funds to access investments where only investors or institutions with big accounts can invest. If it's a fund-based investment, who will bear the management fees and sales charges? Are these borne by remaining amount for management fees mentioned in the previous AMA? Any investment cost or fees will be deducted from the invested account. Does the NFTs have a variety to trade? If yes, does it have any other additional benefits aside from cosmetic rarity? All our trades in our collection will have a rarity rank based on how many NFTs have this trade and how special it is. So this is how the value is assigned to the NFT. The rarer, different, or special it is, the more valuable it is. As you can see in our white paper, the rarity rank will be classified into legendary, mythical, rare, uncommon, and common. The benefits of having a rare NFT are high intrinsic value than a common NFT. This will be a multiplier that we will apply when distributing the DAO benefits. And then, if you want to sell your NFT in a secondary market, you will always receive better offers than for a common NFT. What type of staking will you do? Will you release your own token and will give profits with it? There are two types of staking: custodial staking and non-custodial staking. Non-custodial staking means that you hold your NFT in your wallet without sending them anywhere or putting them up for sale. Custodial staking is when you send your NFT to a staking wallet that is out of your control. Our staking will be non-custodial. We won't create our own token because we think it's not the best option for us, even though there's another collections who has their own token and it's working really well for them. Creating a token means adding volatility to our project and overcomplicate things, and obviously we don't want to risk. How often are the DAO dividends paid? Do all investments last the same? Alright, obviously, all the investments can't last the same. Every investment is different from each other, and it must be treated like that. For example, in an NFT investment, we can't take profits within a day, maybe within a week, another kind of investments maybe within a month. And then we need to consider pre-sales, private pre-sales are long-term investments, and every investment will have a different setup. Regarding the dividends, they will be paid every time the DAO community decides to sell, and we get the stable coins or Solanas in the DAO wallet. Let's see an example of a pre-sale to clarify all this. But first of all, let's introduce two new words into the DAO vocabulary. TGE, which stands for Token Generation Event, and vesting. What's TGE? TGE is the state that involves the technical generation of the token in a blockchain-based network, and it's linked to a market in form of a public sale, private sale, or ICO. It's important to remember that we will invest in the stage prior these ones, which are the private pre-sales. Then what's vesting? Vesting is the duration and percentage of the remaining token liberation. Now, having all this in mind, let's see the example. Let's see an example. Assuming we have the chance to invest in a project for 1 cent per token, and the conditions are TGE 10% and vesting at 7.5% a month for 12 months, the first decision that should be made by the DAO is if to invest or not in this project. Let's say in this example, it is a yes, otherwise this video is over before it even begins. The next step is to decide how much to invest. Let's say we got 5 options, 20, 25, 30, 35, and 40K, and the community decides to put in 25K into this project. Therefore, 25K times 1 cent per token equals 2.5 million tokens. And then, deducting the venture capital commission, which is approximately 8%, we would have 2.3 million tokens. In the TGE, 10% of the tokens are released, so we will get 230K tokens. Assuming the token price is now 7 cents, the DAO can decide whether to sell or hold. Let's say the DAO voted to sell. We would receive $16,100, which will go straight to the DAO wallet, as we first must get the initial investment back and split the profits. Continuing with the monthly vestings, let's assume the token price drops the following month to 3 cents and 4 cents, and the DAO decides to hold. So we start accumulating tokens in the DAO wallet. 7.5% of 2.3 million of tokens is 172.5 thousand tokens. Therefore, we would accumulate this amount monthly in the wallet. Let's imagine it's the 5th vesting and we already have 862.5k tokens in our wallet. For some reason, news or market conditions, the token price increases up to 8 cents. The DAO decides to sell them and get $73,312. As we said before, we first must get the remaining initial investment amount back, which would be $8,900. Therefore, we would have $64,412 to split into the DAO economy. So the 70% is for the DAO members, which means $45,088 profit to split among them. Let's continue with the vestings. The token price drops again, and the DAO decides to hold the next 6 vestings and keep accumulating tokens up to the 11th vesting. In the 12th vesting, we have accumulated 1,207k tokens. The token price is 5 cents, and the DAO decides to sell, getting $62,790. So the 70%, which is $43,953, would be split among the DAO members. It means we would have gathered $89,041. Let's see an example of a holder who owns a zombie and a skeleton. The holder has 2 NFTs out of the 3,000 and a multiplier for owning the 2 factions. So we could say the owner would have approximately 1 of each 1,000 points. Therefore, we can assume 0.1% of the DAO profits will belong to the holder, which would be $89 profit from this investment. Considering the new supply, we calculate we could do 14 investments of this type a year. Therefore, 14 times $89 would be $1,246. Then there could be an estimated profit amount just coming from pre-sales. Then we should also consider the other type of investments we do, like NFT bargains or trading bots. We were supposed to answer the questions about the series and the animation, but it doesn't make sense to answer them now, as we have had to give up that part due to the supply reduction. Instead, we will explain the reasons that led us to this decision. You can also find the reasons in our Discord. The reasons are the following. The main reason is we've been seeing in the market that collections with high supply are failing, even having an amazing marketing and team behind. Also, other collections that we try to collaborate with are declining the offer due to high supply. And then the series and animation demanded big budget and revenue, and was the least attractive for our community. So we decided to eliminate that part and reduce the supply, which won't have any negative impact for our community. The good news is that only brings positive results for the holders. A lower supply makes the NFT rarer, therefore more exclusive and higher valued. Also, considering the offer and demand in the secondary markets, when the demand increases, the NFT value will increase too. Regarding the DAO, everything is the same. 60% will go straight to the DAO wallet, and investments will be made in smaller amounts. But the profits will be also split in a decreased number of holders too. With all that, Crypts, I bid you farewell. I hope we clarified all the doubts and questions, and I'll see you soon.